Hi there, and welcome to a video where we'll have a look at the Belthold candlestick pattern as available from our candlestick pattern indicator for NinjaTrader 8. You'll find that in our premium section at lizardindicators.com. It is a pattern which is quite similar to the Mariposa pattern, and I'll talk about that in another video. Basically, the Bullish Belthold is located in a downtrend where a large candle opens up at the low and rallying towards the top of the candle, closing near the high, leaving only a small wick at the top. And so the requirements are that the prior bar is a down close, current bar is a up close. This needs to be a large body when compared to the average that you have in the look back period. You do not have a lower shadow and only a small upper wick on this candle. The current bar also opens at or below the close of the prior bar, but there is a slight exception to this rule, what we call the one tick rule, and I'll explain that here shortly. Just go over the bearish Belthold pattern first. So that is a bearish reversal preceded by an uptrend. So prior bar is a up close, current one is a down close. Again, we have a large body bar comparing to the average in the look back period. No upper shadow and only a small lower wick. And the open here is at the prior close or above, again, subject to this one tick rule, which is based on the fact that the indicator was designed for intraday bars. And in short, on intraday charts, you will barely find any gaps because the market is not closed between bars, and therefore mini candles tend to open at or near the close of the prior candle. But whether the bar open is one tick above or below the prior bar does not really have significant meaning. It's accidental and depends on a single buy or sell order. So for Belthold patterns, that means that a one tick difference between the close of the prior candle and the current candle does not invalidate the setup. So we do allow for a open here, one tick below the close as well. So we'll have a look at that in the chart here. We see a bearish Belthold pattern. And if we open up the data box, we see that the close of this prior candle was at 14,113.75, and the open of the next was at 14,113.50. And so this is acceptable for identifying a bearish Belthold candle. If you want to get into the details of it, even more bearish than a candle that opens at or above the close, so there is no reason really to exclude it. So a bullish example would be this one. Prior bar was at 14,471.75, and the open of the Belthold candle 14,472 even. And we'll have a look at a couple of other options that are available in the indicator dialog box. Obviously, the average is important here. And so you'll find that calculated by the reference period. And then, of course, this ratio, which we use to calculate the body candle. So if we change this to, let's say, a more restrictive definition, 2.2, this candle does no longer qualify as a large body bar because we've moved the requirement up quite significantly here. Moving it back, we will meet the requirement. You also have the option to define the wick sizes here. So we have for the Bullish Belthold a very, very small lower shadow size allowed here, and then the maximum upper size. So if you dial this up or back, then you will allow more or less patterns to be identified. All right, so with that, I think we will conclude the presentation of the Belthold candlestick pattern. If you have any questions for me, feel free to reach out via the contact form at Listed Indicators. Otherwise, drop me a line at info@listedindicators.com. Always happy to hear from you. Until then, take care and bye-bye.